My fellow investors, welcome back to the Newcomer Investor Channel, where we talk about great businesses with awesome people. Today, I am thrilled to welcome back Aria to the show. We first connected, I think, a few months ago, right? And we had a really wonderful conversation. So I'm very excited to have a chat again. Aria, how you doing?
I'm great. Thank you for having me back.
Thank you for being here. Yeah, honestly, I got a lot of very good comments about our first conversation. It was one of our most popular ones. People really enjoyed the quality of your analysis and of your thinking. So I'm very, very excited to just dive into all the new developments that happened since we first spoke. So
Yes,
yeah, so without wasting any
there's been a
time, I
handful of
know, right?
developments.
Exactly. So without wasting any time, yeah, I'd really like to start with, if you recall, first time we spoke, you really enjoyed lots of different companies, and we found that since then you have changed your mind. You got new information and you sold them. So I'd like to kind of get through just your line of thinking, what changed, what happened, and why did you make those decisions? Let's start with Mastercard.
Yeah, I mean, I was hoping just to kind of set the stage, talk about like the current state of the portfolio first, and then
Sure.
uh, right. So as it stands currently, the two main changes that have happened since last time around is I sold Mastercard for Fiserv, and that's Fiserv with a V at the end. Um, and then it's like a payments company. It's not the Pfizer, the healthcare company that you instantly
Oh,
think of. And then additionally, right. And then additionally, I sold Salesforce, and that made its way into a mix of like Uber, Amazon, and Google. So the current state of the portfolio, and I'll have this up on screen, but for those of you listening, it's about 30% Amazon, 20% Uber, 19% Google, 13% ASML, 8% Fiserv, and then it's a mix of 3 and 2% for more speculative plays in these like small caps, Transmedix, and Hims and Hers. So uh, I believe you asked about the change into
I'd
Fiserv.
like to hear, yeah, what happened with Mastercard? First,
Yeah,
maybe,
so
sorry, let's first, just in a 30-second elevator pitch, remind people why you liked it in the first place, and then we can go into what changed.
right. I mean, Mastercard, in my opinion, is probably, and whatever I say, same thing for Visa, by the way. But those two companies are probably the widest moat businesses in the world. They have natural, organic, secular growth of about 10% simply by existing. It's one of the most durable cash flow profiles of any business on earth. And they're sitting atop, essentially they're like a tax on all commerce around the world, and from that they don't need much reinvestment, they don't need much capex, they have like 50% operating margins. I think Visa is actually much higher, it's like 60-65%.
Wow.
But they're probably the best businesses in the world, and if you could get them at a decent multiple, it should probably be in your portfolio. So that's
So,
the
so
thesis with
what
that.
changed? Let's go into
Right.
what changed.
So in terms of the quality of the business, I don't think anything changed, and I'm still very positive on the business. I think 6 months, 12 months down the line, there's a very real chance where I could be a shareholder of Mastercard again. What has changed in the meantime is me as an investor. Where, if you recall, on the first podcast that we did together, I was kind of explaining how I've gone from this like hyper growth investor to like shifted more quality and like
Hmm.
looking for more durable businesses, stuff like that. I'm not back to hyper growth, but I'm definitely I would say I'm more growth at a reasonable price now. And so like that's become a bigger consideration for me. I kind of described it as like more Bill Ackman style, where it's like you're still looking for wide moat companies, but then if something changes with these wide moat companies, or if you find a drastically better opportunity, no problem. Like I don't subscribe to the buy and hold forever ideology. I think that can kill your returns in the, call it, 3 to 5 year immediate term. So I would describe it more as the Bill Ackman style of like, definitely buy wide moat, durable cash flow profiles, everything like that. But if you find the better opportunity, or if you think that there's a drastic difference between your future returns in stock B as opposed to stock A, by all means, go for it. So it's the ideology shift that has happened for me since the last time we talked.
Okay, so am I correct in assuming then that, like you said, you still really like Mastercard, you just found a better opportunity that fits your new investing style a little better then, and that is Fiserv.
Right. So I guess to kind of lay the foundation for that, they're both payments company. They just service different portions of the payment industry. The analogy I'd like to give is if Mastercard is the rails for payment, is the payment rails of the industry. Fiserv, let's just call it
Oh,
for simplicity. They're like the train itself, right? Or they're like the person driving the train, or whatever the case, right? So it's different parts of the industry.
okay. Can we dive into that company a little more? Because I honestly, I'm a blank slate. I had literally never heard of that company until you first mentioned it. So let's go deeper into that analogy and just how it works in general. Yeah,
Right,
what
right,
is it? What do they do?
for sure. So the best way I like to explain it is they have six different segments to the business, and so three of those segments is super legacy, old, 99% retention core banking services. So that part of the business is like the cash cow. I would just say that that's like the core banking, right? And they have 40% market share within the US. This industry, the market share dynamics have not changed for the past 20, 30 years. It's like super slow growing, but it's very profitable. So like the services they provide for that is like account onboarding, loan management, digital banking, transaction processing, account management, like very core, like super integrated services that banks need for their day-to-day operations, right? And again, 99% client retention like kind of speaks for
Wow.
itself, right? So
Yeah, that's impressive.
yeah, and then I would assume the 1% or less than 1% churn is just like bigger banks buying smaller banks. So like if you
Okay,
look at
right.
like
Yeah.
you know what I mean? If you look at like actual churn from a company moving to a different solution, it's close to zero on that front, right? So and they can increase prices, they could increase from volume growth over time and stuff like that, 5 to 6% revenue growth on that entire segment. They actually own. This is probably the weakest part of the business. They own the third place debit rails within the US behind Mastercard and Visa. So that's the very small overlap that they directly have with a Mastercard and Visa is they operate the debit rails. That part of the business is in decline. It's I believe it's the smallest revenue segment of the business as well. We're not going to talk about it more from here.
Hmm.
They also have like a merchant acquirer business similar to what like an Adyen or a Stripe does or Braintree from PayPal. You could kind of think of it as like, if you've received payments on PayPal, if you're like a video editor, right? And you receive payments from like somebody in Europe or whatever, um, they're going to send you that money in a PayPal account, right?
Hmm.
And then from the PayPal account, you then withdraw it and put it into your bank account. So the merchant acquirer model is kind of similar to that. And so these are like banks where when you receive payments, if you're like Uber or whatever, it first goes into like a pseudo PayPal account, but for enterprises before it ends up
Okay.
being withdrawn into the main bank account of Uber.
I
So
see.
that's the enterprise merchant acquirer business, and so that's like a legacy component. So actually, Uber does not use Fiserv, but like I've seen like Chipotle, I believe.
Okay.
I've seen their payment terminals at Chipotle or something like that, right? So they're the second place in that, by the way, behind JP
Oh.
Morgan. So they have
Oh.
13% market share. JP Morgan has 20% market share. Again,
Oh,
another just like
interesting.
huge cash cow for the business.
How
And
can,
then
sorry, if I can just jump in on that part. What's the competitive dynamic in general in terms like does that market share kind of stay more or less the same or is there a lot of movement? How
yeah, so
does that
in the legacy solutions, once you start using one of these payment terminals, and it's very entrenched. So in
Okay.
general, within the legacy solution, so the JP Morgans, First Data, Fiserv, so on and so forth, it generally doesn't shift too much. There is a lot of consolidation in the industry. So Fiserv themselves, like I think 5 6 years ago, they bought like number four in the industry, right? And
Oh,
then
okay.
they've
Yeah.
become huge.
Nice.
I believe very recently, I think First Data was saying I mix up these names. Or maybe it was Global Payments. One of these companies was
Okay, yeah.
also buying another one, right?
Okay.
So there's a large amount of consolidation within the industry. But overall, no, the within the legacy players, there isn't much market share changes. But then Stripe and
Okay.
Adyen, which are like your new age merchant acquirers, those are definitely taking market share for newer companies like digital companies, the Ubers, the Adobes, Airbnb, etc.
Okay. But you still feel good about this one in general. There's still a good growth profile
I
even
mean,
with the legacy. Yeah.
the growth speaks for itself, right? Like they're growing revenues, I think 14 15%.
Wow.
Um, that looks like a pretty solid business to me. Finally, we have Clover, which you're not going to know the name just off the top of your head, but like if we put the payment terminal on screen. You guys have 100% seen these at malls, farmers markets, food trucks, whatever. You've definitely
Hmm.
seen these payment terminals. It's like that white looking
Yeah,
POS or
I know
whatever.
that one. Yeah, yeah, yeah.
Yeah,
That they own
yeah,
that?
they own that. Yeah, exactly.
Oh, okay.
And so that is the holy grail of the entire portfolio of payment solutions that they have. That part of the business, fastest growing. By my estimation, it's like 2/3 of the incremental growth is coming from Clover. So it's by far the most
Wow.
important.
What?
Yeah, yeah, yeah,
Oh.
yeah. And so they're growing revenues on Clover close to 30% year over year.
Wow. So, okay, let's also dive deeper into this Clover. Like, what is it exactly? Again, I'm speaking as someone who's not at all in that industry. Like, what are they doing that's different from everyone else in there? Because I know they're machines, but I don't know what, like,
It's
yeah.
it's a generally commoditized space, so there isn't much difference other than like the fees of going with a Clover solution versus Square's the
Hmm.
Square terminal versus a Shift4 terminal. Oh, Toast is another like huge
Mm.
competitor. They have like a restaurant tilt. There isn't much differentiation in terms of choosing one other than like brand name and stuff like that. But like the industry as a whole is growing super fast. So
Ah,
there's definitely a lot of space for like the top, call it 4 to 5 names within the industry to
yeah.
continue to be able to have this growth. But there's minimal differentiation. Like for example, the one thing I like to say is like each one of these companies like services like a niche within the industry. So like Toast is like really good at servicing restaurants. They've built up that brand name of like we're the best terminal for restaurants. The value added services, the software that they sell on top of the terminal is
Hmm.
like better suited for restaurants and stuff like that. So that's the very minimal differentiation within the industry. I'd say everything in the portfolio of Fiserv is like pretty wide. It's like, the core banking is super wide moat. The other stuff also like pretty wide moat. The only thing that I would consider like narrow-ish moat is definitely Clover. But the industry is growing super fast, so
That makes up for
whatever.
it. Yes. Yeah,
Yeah,
yeah, yeah. If you have a good macro tailwind, I feel a lot of investors underestimate that part, right? But you can have, like you said, a commoditized-ish type of product, but if the industry grows 20% annually and you're already in the top three, let's say, then
yeah.
you're not really in big trouble, usually at least. That's what I've
You
observed.
stand to benefit. Yeah,
Hmm.
yeah.
Interesting. Okay. Well, okay, now let me ask again about the margins.
Yeah, so in terms of the margins, historically, and this is kind of weirded out with the acquisition they did, but they were generally a pretty high margin business. I believe they had around 20% operating margins for a number of years. That has started to creep up over the past little bit as they kind of see synergies within their portfolio of solutions and stuff like that. As it stands currently, we're close to 30% operating margins, and I believe,
Okay.
and they have about 60% gross margins. So
Okay.
margins
Oh,
are super
nice.
solid.
Yeah.
And then I guess to kind of speak to why I bought into the business at the time, Mastercard was like a low 40s trailing PE or forward PE, and Fiserv, if you looked at like the adjusted EPS, because there's some weird one-time stuff going on,
Yep. Yep.
they were basically trading at like 15 times
Oh,
earnings,
wow. Cheap.
right? Super cheap. And so the growth of both these businesses, it should be around that mid-teens EPS growth rate for the next, call it 3 to 5 years. So I see the exact same growth profile, except one of them trades at 40 times earnings, the other one trades at
Hmm.
15 times earnings. Same industry, similar adjacent sort of products, benefits from the same secular growth of more digital payments over time,
Hmm.
except the valuation gap is just super massive, right? So that
Wow.
was kind of my line of thinking
Yeah.
with these two. One thing that's going to get brought up is Pfizer has like just so much debt. They've been
Oh.
doing levered buybacks over the past like I would say I think like 7-ish years or something like that. They have about I think their market cap is like about $100 billion, and they have like 30 billion of debt. So it's definitely like it can definitely turn off a lot of investors.
Hmm.
Yeah.
Well, if the debt is, I mean, I'm speaking without knowing much about that particular case, but assuming that it's, the maturities are laddered appropriately and all of that, and they grow their earnings the way that you said they would, I'm sure that they structured it in a way that they'll probably be fine. That's my assumption, but yeah, I don't know. Yeah.
The one ratio I really like to look at is operating income to the amount of interest that you're paying, right?
Hmm.
So
Yep.
your pre-interest profits divided by the interest that you're paying out. In
Yep.
general, I like to see that ratio be around the 10 times mark. So like about 10% of your operating income goes towards interest expenses. And like, in my opinion, that's like a pretty healthy ratio to maintain. They're at about 9 times EBIT to interest coverage. And
Okay.
so like it doesn't raise too much issues for me. Like if they really needed to, they could chunk that debt down, especially considering that they're growing at about 15% year on year. So
Yeah.
it's right on the edge of being too much for me as an investor personally.
Yeah, yeah. Okay, no, that makes sense. And so this company then, one other difference though between Mastercard and them, I assume, but I'm not sure. I think Fiserv is mostly American, right? Or are they also kind of everywhere?
Depends which part of the business. The core banking has a
Yeah.
huge North American tilt.
Okay.
So it's US and Canada. The merchant acquirer business is global. Clover is global,
Oh, okay, they
and then
are.
the debit rails are, I believe, just US only.
Got
So
it. Okay. Oh, so
yeah,
they have some diversification too. Oh, that's nice. Okay.
depending
No,
on the segment.
right. Yeah, yeah, yeah. No, you make a compelling case. Um, Interesting. And so, speaking here without having checked, but did the valuation go back up a little, or is it still at that around 15x ish?
Yeah, so we're up about 10% from where I bought, and I bought this very recently, like a month and a half ago or whatever.
Hmm.
So there hasn't been that much time, but this is very much a re-rating play. I'm buying into this for it to re-rate back up into like a low to mid 20s PE multiple, that's where it historically has traded at,
Okay.
and I plan on probably selling at that point. It's a great business. It can definitely work super long term. I would rather own like an Adyen in the payment space or go back to Mastercard or whatever. But yeah, the valuation is up a little bit. I think it's like a 16, 17 PE now.
So, what made it go down in the first place? Were there any weird moments, weird
Yeah,
quarter?
so I just covered this in a video actually, but I do recommend like
You
you
can
go
link
see
it.
my explanation there.
Hmm.
Yeah, but basically with Clover, they saw a huge volume decline. So Clover grows in 3 different ways. It can grow through just volume increasing over time, so more people doing more payments on the Clover network. It can also grow through selling hardware, so the actual POS systems, and then it can also grow through value-added services, which is they're selling software to these merchants on top of
Hmm.
the hardware sales and stuff like that. And so probably the most important thing in that entire package is your organic volume growth. So these restaurants and companies at the mall or the farmers market, whatever that we've sold this hardware to, are they in of themselves growing at like call it
Right.
15% or whatever, right? They're doing more payments, they're
Hmm.
growing and causing 15% more payments. So that declined from 14% volume growth in Q4 to 8%. But it's a bit
Oh.
misleading because and again, I covered it much better in the video because I don't have
Hmm.
it in front of me.
Sure. Yeah.
Um, but like they explained that there was like a one-time pull forward in last year's volume growth, so it made the comparable figure look worse.
Right.
So that accounted for like 2% of headwind. There was another like 2 to 3% of headwind. So if you strip these things out, it looks like the slowdown is from 14% to 12%, which is not that
Okay.
big of a
Yeah.
deal, right? You know what I mean?
Not so bad at
So
all. Yeah. Yeah. Yeah.
I don't think a 2% slowdown justifies the stock going down 30% in the same time frame. You know what I
Yeah.
mean? So
Yeah. Yeah.
um, yeah,
Okay. No, that's interesting. Well, you make a very compelling case. And yeah, no, I'll definitely have to check that one out. Um,
it's
uh,
it's a it's a great setup at the moment. Yeah.
yeah. And so you said you're thinking of holding it for like 3 to 5 years or until the valuation goes back up.
Yeah, if the valuation re-rates to a 25 PE in the same time frame in a perfect world, Mastercard trades down to like a low 30s PE. That disparity between the two companies that I was talking about earlier that slips away. At that point, I would favor Mastercard. I think Mastercard would outperform Fiserv at that point. So I'd be inclined to switch back at that point.
Okay. Would you switch back into Visa also, or just MasterCard? Still your favorite?
I'm I still like Mastercard better because the value added services that they have they grow a little bit faster than Visa in general throughout time. The slightly higher valuation for Mastercard has been justified by the fact that they grow a little bit faster than Visa
Hmm.
throughout time, and the stock has outperformed Visa for most time frames
Okay. Okay. That makes
as a
sense.
result. Yeah.
Cool. Okay. Anything more you want to say about Fiserv, or shall we move on to our next one?
No, I think we can move on. Did you want to talk about
Excellent.
Salesforce?
Yes, that's the next
Salesforce.
second big one. So you made a very compelling case about Salesforce in our first discussion. I love it. You know what? I have a lot of people who literally said, "Oh my God, the piece about Salesforce, no one's ever spoken so well about it or explained it so well." And even I learned a lot from you about it. So it was a very exciting hold in your portfolio. And yeah, now it's gone. So please, same thing, if you can, in 10 seconds, explain what Salesforce again for people who don't know, and then explain what changed.
So I'm sure actually a decent number of people know what Salesforce is or have used it at previous jobs, but it's essentially it's what's called a CRM system, customer relationship management. So essentially, any data that you have on your customers would go into Salesforce. So like, um, I guess the good, like a pretty decent analogy on how it's used is like if you are, like a marketing or like a sales and marketing agency, right? And you have all these different clients that you're servicing. They're going to be selling their product for or whatever the case may be. You have to like store that information somewhere of like their contact information or like related information on like what the client wants and stuff like that. So basically every business in the world, even ones where like you'd imagine like think of like a brokerage, like a Wealthsimple or something like that. Even they have a maybe not Salesforce, but they definitely have a CRM system where they're managing their relationship and they're managing their customer data of not you and me who sign up for a Wealthsimple, but like from like a business to business perspective. If like Wealthsimple has a relationship with say like TradingView or whatever, they have contact information of the TradingView employees within Salesforce
Mhm.
or within their CRM system. So it's super mission critical. Every business in the world, essentially every business in the world needs a CRM system, and Salesforce is like by far the number one leader in that space. They have about 25% market share. They're the industry standard. It's kind of like the Microsoft Excel of that world. Yeah.
That's a great way to put it. So what changed?
The growth has, and I was pretty optimistic on a revenue reacceleration. And my reasoning for that was there's a KPI. Shout out to Fiscal AI, by the way. But there's a KPI in there where it shows you the amount of revenue in the pipeline. It's called total revenue performance obligation, TRPO, or RPO for current year. And so that was for a number of quarters that was growing faster than the revenue growth. So I was looking at these two numbers. I'm like, okay, they have more revenue in the pipeline, or the revenue in the pipeline is growing faster than current revenue growth. Shouldn't that translate to a revenue reacceleration? Call it 6 to 12 months down the line. That hasn't materialized. And particularly, what really made me sell out is after the Q1 earnings were announced. I was expecting for them to give guidance for the full year, and we'd see like, okay, we're back to 10% growth, whatever, which is kind of like my bare minimum in terms of revenue growth. Is I like my businesses to grow at least in the double digits, because then you tack on a little bit of margin expansion, a little bit of buybacks. You're looking at that sweet spot, which is like 15% EPS or free cash flow growth, and that didn't come. I think they said 6 to 7% revenue growth, which speaks to this business being a little bit more mature. Another sort of thing that it wasn't a big priority, but I definitely appreciated was I thought that the business would start pursuing organic growth in the future and try to be able to create more softwares and solutions to be able to sell to their customers, as opposed to going and acquiring for $10 billion this random software company that you've never heard of.
Oh,
That has also changed. They're back on their acquiring spree. They're buying companies left and right, 3 billion, 7 billion, 10
ah,
billion. So
yeah,
it's I don't appreciate the inorganic growth to try to boost revenues. I would have rather them pursue the organic route. And so that's also changed. But as it stands
I
currently,
see.
they're growing at about 7% revenues over the in the last quarter. And that's good. Like you can still get outperformance with that, but me personally, with the other options that I have in my portfolio and where I invested the money after I did sell,
Mhm.
I think you can get better performance in these other names at a cheaper valuation.
Just okay, not knocking your investing strategy at all. I think it's fantastic. But being devil's advocate here, just
Of course.
if like, do you ever feel that it's almost impossible for a company to just knock it out the park every single time? Like, how much rope do you give to a company, let's say, for one bad quarter or one bad year? Because frankly, I see a lot of amazing companies that every now and then they have kind of one kind of not great quarter or year, right? But then they come
Yeah.
back. Do you feel there's a chance for Salesforce to come back, or is it like a permanent impairment of their capabilities?
Yeah, it really just depends on what the company is that you're investing in. If it's like a Lululemon, Nike, Starbucks, whatever, those companies are very prone to the consumer. They can definitely have really bad quarters and then bounce back next quarter or bounce back next year,
Hmm.
no problem, right? With Salesforce, you are a 93% retention software company. If the revenue is slowing and if the trend of the revenue, maybe we could put this chart up as well, but like you could see over the past like 3 4 years, the revenue is continuously slowed as they've made this push towards profitability. They're guiding for another year of slowdowns. I think the trend kind of speaks for itself. I think Salesforce is in a new chapter where it's no longer growth at all costs and just try to get as much revenue on the books. They're looking for more profitability. They're probably a little bit
Hmm.
more expensive. The package as a whole has been, I wouldn't say devalued because I think Salesforce is incredibly valued for its customers. Um, Maybe the end user has something to say about that and they're not too happy with Salesforce.
Yeah.
But if you're talking to executives, it's the industry standard. Everybody knows how to use it.
Yes.
People will definitely continue to. There's going to be new logos that will be using Salesforce in the future. So I still think it's a super solid business, but I'm questioning the growth of it, and I think it's going to shift more towards like an Oracle type software company where
Ah,
it'll be around for a very long time.
yeah.
It's definitely super important and used by everybody, but it's definitely we're past the days of like comfortable double-digit revenue growth,
Yeah.
and that's kind of my analysis of it.
Yeah. Okay. No, that totally makes sense. Cool. No, thank you for sharing that. So I guess let's look at what you put the money in now. You got some new holdings that are very interesting.
Um, well, actually, with the Salesforce sale, it about half of that money made its way into Uber, or maybe even more than
Oh,
that.
oh,
I can't
okay.
remember because I did it
Yep.
over a period of time.
Sure.
And so, I mean, you could see like from the point I sold, which I sold at like around an average of like 330 on Salesforce. Currently, the stock is at like 270 something. And again, there's a bit of like luck when it comes to timing stuff like this, but
Of course.
I think the writing's on the wall. The company's revenue is slowing down. They're at a pretty expensive multiple, whereas Uber is actually the polar opposite situation. The valuation at the time was super cheap, and they're growing much faster than Salesforce. So it's just it's a matter of comparing the two different opportunities. So most of that money made its way into Uber at an average cost basis of 67. Uber's at like 93
Hmm.
today. So
Hmm.
I'm up, 35, almost 40% on Uber in the same time where I think Salesforce is down, I don't know, probably about like close to 20%. So I've
Hmm.
made like a 60% delta in between that over the past,
Yeah.
call it
Excellent trade.
nine-ish months. So this is what I'm talking about when I say like I'm not scared to be able to swap out of these companies and stuff like that. I don't subscribe to the buy and hold forever because opportunities like this arise all the time.
Of course. Yep.
With the rest of the money, it made its way into Google and Amazon. The performance on that hasn't been as impressive, but I think both those companies are outperforming Salesforce in the same time frame as well.
Hmm. Okay, let's look at some of your new. I'm sorry, by the way, I thought that that one went into your new holdings, but it didn't. But I know you have new holdings that I'd like to hear a little bit about. Let's start with Transmedix. So this one, a few months ago, everyone was talking about it on FinTwit, and now I don't hear about it much, but I think you still have it. Yeah, give us the whole introduction on this.
Yeah, so for reference, and I'll just remind listeners, Transmedix, and I'm assuming we're going to talk about HIMS after. These are
Yes.
3 and 2% positions for me, very much by design. They're small speculative bets. That's how I like to frame it. By no means am I dumping 10% of my portfolio into this. They're very much earlier stage businesses growing super fast. And particularly with Transmedix, I think it's an early monopoly in the industry that they're servicing. So they make what's called organ care systems, and essentially historically how it's worked in the healthcare industry is if somebody wants like a lung transplant, if somebody wants a heart transplant or whatever, you just put it on ice and like kind of hope for the best. And so when you do that, the lung or the heart or whatever, if it's on ice, it has maybe 3 4 hours where it can be outside of the body, and like the organ is kind of dying while
Hmm.
you're trying to transport it to like a different hospital or whatever the case may be, and like get it into or transplant it into somebody else, right? So it's been definitely challenging, and a lot of organs just die as a result of that. So what they've done is they have these machines that for like around 24 hours or so, you could put it into the machine and that can survive outside of the body as if it was still pumping inside of a living human being, and you could transport that,
Oh wow.
like basically around the world. So they're currently only in the U.S. and like that opens the door to, like, for example, I think there's about 50 hearts that um, like in Hawaii that just don't make it to other parts of the U.S. where
Mm.
that would
Hmm.
obviously work well for other patients and stuff like that.
Yeah,
And so now that opens the door to, like, if somebody unfortunately passes away in Hawaii, that heart can be transported to somewhere else within the U.S. within 24 hours, and that can be used. So
I
that's kind of what
see.
they're doing. They're an early monopoly. They're the only FDA approved organ care system, and yeah, they're growing
The
super
only one.
fast. They're yeah, that's what I'm saying. They're an early
Oh
monopoly.
yeah, yeah,
They're the
yeah.
only FDA approved business.
So,
Yeah.
um, I'm not American, and neither are you, I think. I
No.
but you know more about the Americans than I do for this. Where does the money come from? Like, who pays for this? Is that like private customers? They just pay for it, or the insurance, or
At the end of the day,
hospital?
I think, yeah, I think it would be a mix of insurance or the the end consumer, I guess, in this case. And
Mm.
so the hospital would end up buying one of these machines for 300, 400, whatever. And then there's about another 150,000 in terms of one-time use uh, items, or like the plastic lining and like whatever the
Mm.
case is,
Yeah.
stuff like that. So I think, a heart transplant in the US could run you as much as like $1 million.
Oh Lord.
Uh, yeah,
Yeah.
it's definitely expensive. So yeah, it could run you around $1 million to get a heart transplant, or a lung transplant is probably a little bit less, but still definitely significant amount of money. Um,
Do they
but
also do like livers and stuff like that, or is it just hearts and lungs?
liver is also another one. I believe from memory, it's like the smallest revenue line for them. Like, it's really insignificant.
Mm.
Where they're really good at, or where it drives the most amount of revenues, is heart and lungs. I think the
Okay,
two of
I
those
see.
combined is like 85% of revenues,
Oh wow, okay, yeah, yeah, yeah. And so
something
this
like that.
this business, their revenue growth, if I recall, has been incredible, right? It's like insane, 100+% or something, quarter
But
over
it's slowing
quarter.
down. I think it'll be closer to 40%. By the way, I just pulled up the numbers. I'm completely wrong on those numbers.
Oh,
Lungs is by far the smallest revenue line.
oh, okay.
Liver alone is 72% of revenue.
Oh,
So sorry.
what? Oh,
Yeah,
oh,
yeah.
oh, good.
Sorry.
Oh, interesting.
I misremembered those numbers.
No, no, that's okay. Oh, interesting. Okay, so it's a liver, mostly a liver business,
Mostly a
with a
liver
with a
business. Yeah.
side of lungs and heart.
Yeah.
Okay, yeah.
With 20% heart.
Yeah. Okay.
Yeah.
And so as you said, so the FDA piece I think is very interesting. Do we know of any competitors that are trying to copy, like do something similar, or is right now they're kind of the only ones doing this type of thing?
Yeah. I mean, there's like 20 of them, but they
Oh.
haven't made any meaningful ground.
Hmm.
A point of competitive advantage for Transmedix is they're starting to own the fulfillment. So they bought their own airline,
Oh.
and
Oh.
they have about like 20, 25 planes or so. So that is, I think, the point of moat for them long term, is
Yeah.
that, if there is another company that figures out the technology, gets FDA approved, first you have the problem of convincing the hospital to buy your machine. And odds are
Yeah.
by that point, like, they already have Transmedix, or Transmedix is the
Yeah.
industry standard, stuff like
First
that.
mover advantage.
First mover advantage, of course. But then in addition to that, if you go with Transmedix as opposed to a competitor, you know for a fact that they're able to deliver that heart or that liver uh, across the US, no problem, because they own the fulfillment themselves
Yeah.
and they have the
Ah,
planes.
that's cool. Okay, so yeah,
Yeah.
really entrenching that moat or like very early on so
Yeah.
that they're gonna be the default option.
I would say another sort of like long-term moat for them would be, and you've seen this with the Da Vinci systems from Intuitive Surgical, which is another like medical devices company, but they're used for like surgical operations and stuff like that. And so with their machines, and I'm not too well versed on the history of it, but I would assume a similar dynamic played out where you get the early mover advantage and you kind of establish yourself as the leader and all that type of stuff. And then all these surgeons are kind of growing up or going through the industry, learning how to use the intuitive surgical
Ah,
machine. So
yeah.
a similar thing can start to happen where,
Yes.
today, I think about 15% of transplants are done by Transmedix already. The rest of it is on
Wow.
ice. So
Oh,
like,
okay.
dude, like that's roughly they should be approaching every 1 in 6 transplant being done by Transmedix. That's a very significant portion of U.S. transplants,
Yeah.
and so that's starting to create almost like a network effect of people or these healthcare professionals learning how to use the Transmedix machine. And
Yes.
so if they go to another job, they're like they already know how to use it, and like that'll probably push the hospital to be purchasing a Transmedix machine as opposed to another competitor.
Yes, no, for sure. Yeah. Oh no, that's very interesting. Yeah. I mean, we see this in every industry, right? When you have a type of product that you use as part of your job, once that's the product, it's really hard to get you to go to another product, right? Especially if
Yeah.
the product is already good, it does everything you need, and and they keep adding on new services on top to make it even better, right? So
If they
yeah.
own the fulfillment, perhaps,
Yeah,
right? So a
exactly.
lot of there's a lot to like here. Of course, they have to execute over the next 5 to 10 years, and we'll
Yeah.
we'll see where that goes.
And the regulatory environment has to be favorable, which I mean
Absolutely.
for now it sounds like it is, but with healthcare, it's always kind of tricky sometimes. So, but yeah, no, that's okay. That's very interesting. So, how's it looking in terms of, valuations and all that kind of stuff?
Yeah, so I mean, they're just starting to come online with profitability. I think they have about 10% net margins, and like that's going to increase over
Okay.
time. For reference, this is, I think, a 60% gross margin business across both the airlines and the actual machines themselves. With just the
Oh,
medical devices, it's like 80% gross margin. So they
oh,
definitely have
wow.
a lot of room to be able to increase those margins. I think we could look back 5 years down the line, be staring at like a 20% net margin figure, and like that would
Hmm.
not surprise me. Yeah.
Wow, exciting.
So
Okay.
sorry to answer your question in terms of
Yep.
valuation.
Oh,
Trailing PE is about 90, forward PE is about 70. But then again, like remember,
yeah, yeah,
this is
yeah.
they're just
It's the
starting to
beginning,
increase their
of course.
margins, right? So that you'll see that number come lower over time, and of course they're growing super fast. They're growing revenues like 45, 50%. So
Yeah, no, that's
take that
very
into
impressive.
consideration as well.
That's very, very, and then imagine if they expand to other countries, though I don't see that happening maybe in the short term, but if they do longer term, that's also,
It, yeah, of course, totally makes sense.
yeah. Cool. Okay, no, made a very good case for that one. So you said that's a 1% position.
3%
Oh,
position,
3%. Okay, so
but
let's talk
it's
about,
grown into that.
oh, okay, let's talk about the 1% one now. So that's HIMS.
So this was I don't know. I was just looking at the KPIs on fiscal.ai and just looking at the numbers and the revenue growth, the average order value, the number of subscribers, and everything. Anything you want to pull up with HIMS, it's just up and to the right. And this is one of the very rare cases of one of these like super hyped up FinTwit names. Like there's actual substance behind it. It's at like
Mm-hmm.
a pretty decent valuation multiple as well. So I was just thinking, and it totally makes sense, like the industry that they're servicing. Of like, yeah, like I think of like, for example, my dad, right? Like he's taking pills for like, I don't know, like thyroid or something like that, and like, yeah, like why does he need to go all the way to the pharmacy 30 minutes away every single
Mm-hmm.
month just to get the same?
The same prescription. Yeah,
Yeah,
over and over
exactly, right?
again.
Like,
Yeah.
why? Why does he have to make that trip down to the pharmacy every single month to get his same subscription? Like, why is that not just sent Amazon style directly to your door and you forget about it, right? So,
Yeah.
and if you listen to the CEO of Hims talk, there's a lot of like, oh yeah, we're going to be the Amazon of this, we're going to be the Netflix of that. I think that has some merit to it. I think they are, making it more convenient and affordable for the consumer. Over time, I think they have like 2.5 million subscribers as it stands currently. Over time, I could definitely see that number continue to grow and more people that are, relying on these subscriptions or these
Prescriptions. Yep.
excuse me, yeah, prescriptions. Um, it just makes sense. You know what I mean? So
Yeah.
again, the position sizing is like 1-2%. Like this is not like a fully fledged out super thesis on the company. There's people that are much more well versed on the company than I am. But I just see, the growth across the board. All the KPIs are moving in the right direction. It's in an industry that makes sense. It kind of hits home with, for example, my dad. That's kind of the line of thinking with that business.
Yeah, man. I have a special love for companies that are great for shareholders and also for customers, right? When it's really about building a product that makes people's lives easier, I think that's just awesome. And if it's cheaper as well, that's just wonderful, right? I will say I'll give a quick shout out to at the Wealth Trap on Twitter. he was telling me about Hims literally like years ago when it was, I don't know, like $2 per share or something. And he was like, yeah, this is the new greatest thing. And I was like, I don't know, man. I just got burned by Teladoc, another healthcare stock. I was like, I'll stay out of healthcare. We'll just see, right? And now here
Yeah.
Hims is doing, I don't know what price it's at now, but I know it's done extremely well. So yeah, congrats to the Wealth Trap.
It's up like 10x since he
Yeah.
told you
Oh
about
man, that's
that.
incredible. I mean, yeah, biggest era of emission. Although I have many of them. I also used to own Uber, by the way, at $30 a share,
Yeah,
and I
yeah.
sold it at like 35. So what a stupid mistake. But anyway, no, that's cool. So you said it's a 1% position, and you're just kind of like leaving it for now, just kind of see where it goes, type of thing.
Let's just see where it goes. It's a
Mm.
promising business. I had I just said this yesterday, but I had like $200 of like just cash sitting in my account. I think it's like a mixture of like dividends and like just leftover cash from
Mm-hmm.
like I don't know a while ago.
Yep.
It's immaterial to the position sizing, but I just decided to chuck it into Hims.
Oh,
So
okay.
I guess I did technically add a little bit to it recently.
Yeah. So, did you hear about this thing? This, and I didn't even have it in our agenda, but I saw it like the other day. They had this big problem with another healthcare company or something, and the stock fell like 20% or something. I don't even know. What?
35%.
Yeah. What? Can you explain what's going on there? Like, what's that?
Novo Nordisk. So very briefly, I think it was like a 2 month partnership, like super small. They were supposed to sell Novo Nordisk's Ozempic on Hims and Hers, and like I guess that's over with because of some issues to do with like Hims was still selling the generic version, and that like obviously cannibalizes on Novo stuff, and like
Oh.
I
Mhm.
don't know, it was a bit weird. I think it was quite a bit of an overreaction,
Like
but
the
yeah,
stock market, you mean, overreacted?
yeah, I think I don't think it should trade down 35% on those news. It did
Yeah.
shoot up like 20% on the news of the announcement of the partnership. So I
I
don't know.
see. Yeah. Okay. Well, one of these big market opportunities, perhaps then.
I think if you look at super long term, that's probably not like why you have invested in the company to begin with.
Yeah. Yeah. Makes
Yeah.
sense. Okay, no, that's exciting. All right, I would like to dive into another topic now. So this is something that we've been seeing a lot on FinTwit. I think you've participated a little bit in discussions on that, and I've been kind of looking from the outside looking in. Uh, Google and Uber and Tesla. There's a lot of discussion now around who is going to win this race of autonomous vehicles. Some people saying that, Uber is threatened by Google, or Tesla is threatened, so I'd love to hear maybe if you could summarize the case for those three companies and then explain why you think Uber won't be disrupted. I assume that's your position.
So I guess I'll tackle this from the bear case first. I'll do my best to obviously I'm super biased here
Yeah,
being an Uber shareholder and stuff like that, but the argument is, and on surface it makes sense, it's a very easy sort of thing to kind of try to make the case for of like, okay, Tesla is going to solve self-driving. They have a bunch of different cars. They're going to open this network up to all, like anybody who owns the Tesla car, and the car is going to go out there, and you're only using it for 2 hours out of the day. It's going to go out there. It's going to make you revenues. It's going to generate you money, like essentially in your sleep. So while you're, doing whatever throughout your day, your car is out there. It's acting as like a pseudo Tesla, and or excuse me, like a pseudo Uber, and it's picking up passengers and dropping them off, and great, everybody's happy. It's going to do it at a much cheaper cost than like what it costs to do an Uber, or if Tesla's going to end up owning like a decent chunk of the fleet, that's also going to be great. It's going to be like $5 for ride hailing as opposed to like the 10-15 that Uber's charging you. It's over. Uber is BlackBerry when the iPhone came out. It's Blockbuster when Netflix came out. It's we're done with Uber, right? That's the argument for that. There's a lot of holes to kind of point at in that sort of line of thinking, but I guess to kind of keep to kind of like set the stage, right? We have Waymo there as well, and so Waymo currently is partnered up with Uber, but there's a lot of push and pull with like the way they're doing it. So that they're pursuing a lidar model, which is like a different type of technology. It drastically increases the costs of the vehicle. So each Waymo vehicle costs about 200,000, as opposed to like in theory, if you were to go the Tesla route, and if they're able to solve it, which is still up in the air because they haven't. The self-driving cars that they do have in Austin today are fully supervised. There's somebody sitting in the car and then another person ready in Tesla headquarters, waiting to like take over the car if it makes a mistake. So
Mm,
that's not self-driving. That's supervised driving, right?
right.
With the Waymo model currently, they have it where it's full self-driving and it can do routes in like a geo-fenced area.
Hmm.
It's working. They're doing 250,000 rides per week on that front. Like Uber does 11 billion rides per year, so it
Yeah.
works out
Wow.
to
Yeah.
they're about 100 times bigger than Waymo is currently today.
Yeah.
Which
Yeah.
of course,
Yeah.
like Waymo is going to scale and get bigger and open up to more cities and stuff like that.
Yes.
But it's still funny to see that like the stock trades up and down on like news that Waymo is expanding into a new city. And
Yeah.
again, a huge number of those Waymo rides are being they're going through Uber. Like people are calling the Waymo
Yeah.
because they have that partnership there, right? So
Yeah. Yeah.
I'm not
Yeah.
exactly convinced that this is just like an outright disruption of the business.
Yes.
Um,
Fair. Okay.
yeah. So I guess to kind of make the point of like why Uber wouldn't be disrupted in this scenario, if we go back to the Tesla case of like whether it be Tesla is operating the rides or there's everyday consumers of the Tesla vehicles that are sending out their car. There's a whole bunch of stuff that like Uber does in the background that you wouldn't think of when you start thinking of like an Uber ride. So the clearest example of this that I can give is Uber, given that they've been around for 15 years and they have a huge amount of data, they know the peaks and troughs in terms of demand. So they know during rush hour, the
Hmm.
hours of call it like 8 or like 4 p.m., like 8 a.m. and 4 p.m., there's going to be a demand surge in people calling rides in this particular area of Toronto, right?
Yep.
Because people are getting rides to go back home or whatever the case may be. And that's like the data they have. And they put a really nice chart in their investor slide deck, which I highly recommend reading through that investor slide deck. But like the difference in demand could oftentimes be like two times different. And if you've ever seen from the perspective of a driver, they actually put like bonuses where they know, like for example, for Eats, that around 11:30, people in this area of Toronto, there's a huge demand surge with people asking for food to be delivered, right? So they kind of incentivize drivers to like, hey, like go to this area, we'll give you like a 1.4x multiple on all the orders you
Oh,
deliver, right?
interesting.
And stuff like so
Yeah.
they have all this data of like where to send drivers and stuff like that. Same
Yeah.
applies to rides during rush hour. And like that's data that you can't buy. And
Yeah.
like Tesla would have a hard time sort of scaling that. Odds are whenever you're using your car, other people are also using their car, right? So it's like there's definitely some issues on that front, other than the fact that like the technology isn't solved. Then there's the whole argument of like Uber's doing this across 10,000 cities in 70 countries. Tesla went from, oh, we're going to launch this in the US. You know what? Maybe we're not going to launch it in the US. It's just going to be in the state of Texas. In the state of Texas, maybe let's just start off with Austin. You know what? Not all of Austin. We're just going to do this tiny little geofence area within Austin. So it's like there's definitely a scale issue with this as well. Of like, even if over the next 5 years Tesla starts to expand all over the place, and by that point there's other autonomous vehicle companies as well.
Yep.
I like they just can't scale this, right? And then
Yeah.
they also need all the charging, the cleaning of the cars. What if there's lost items? Somebody leaves their hoodie behind. How are you going to service that? So there's all these like miscellaneous challenges that comes with scaling a business like this that has
Yeah.
costed Uber $35 billion over 15 years to figure it out. This isn't an overnight thing where Tesla miraculously solves the technology and we're good to go to market. Consumers on both sides are going to be using this. That's another thing. Uber has 180 million monthly active users on their platform. There's a clear value to that. And
Yeah.
like, other than Tesla, there's going to be all these different autonomous vehicle companies. And like, there's one in the UK, I believe it's called Avride. There's one in the Middle East. China's been doing this since 2022. And like I would argue that many of these Chinese companies are actually way ahead of all the other different AV companies. And so like, I don't know. There's a lot of question marks around scaling this business without Uber and without having that consumer demand on the other side of the coin.
You make a very good point. Yeah, that's true. I think a lot of people forget, like you said, the importance of having all this mobility data that you have to gather over many years. studying consumer preferences and all these trends and things like that, right? And so the scale that Uber has gathered is quite unprecedented. And yeah, like you mentioned, Tesla
It's
doesn't have all of that. So how
no,
to
they don't.
solve the AV issue without having the data? It's a bit of a challenge. And then there's the regulatory piece as well, which I keep coming back to,
Right.
right? But
Yeah,
that's a
definitely.
big that is going to be a lot of roadblocks around that, I can tell you, from a bit of experience in the machinery of the public service with that kind of thing. It's going to be hard. Even if the consumers ask for it and everyone wants it, it's still going to be very challenging. So,
That's another point you bring up that I completely forgot. But you start to see that there's like multiple question marks in this entire equation. Another thing, as you say, is the regulatory piece. And I was in Cabo about a month ago, and when we were trying to get an Uber, it wouldn't. You're not like the Uber can't come directly to the front of the hotel. You have to go all the way to the gate, which is like a 5 minute walk,
oh,
right? And so it's Uber is a highly localized business, and they have these regulations across 10,000 cities. And
yeah,
the same thing could be said about like airport drop-offs and pickups, right?
yes,
Like there's certain areas you can go, there's certain areas you can't go, and with a Tesla trying to scale all by themselves, they don't have this information. They're going to have to go figure it out. That's going to take a very long time. All
yeah.
while Uber has Waymo on their network, they have all these other companies that are coming online on their network. So it's like you're competing against the consortium of like the Uber mafia over there,
Yeah,
and
it's a good way to put
right,
it. Yeah,
yeah, and then at the same time, like Tesla does not have the profitability profile to be able to scale this and have the charging networks by themselves, have the fleet managers by themselves, the cleaning, like everything in between. They're making, I think, like $3 billion of operating income, which is
yeah.
down 60% since
Oh, wow.
2022. So like you're seeing declining. They do have a very solid balance sheet, but like that'll only go so far if you seriously have ambitions of scaling this globally. And then I guess as a last ditch sort of thing to throw in here, even if by some miracle there is a autonomous vehicle provider that has 90% market share within the US and just like eradicates Uber altogether, right? Uber goes to zero within the US, that's only about a quarter of the business. There's
Hmm.
still 3/4 of the business outside of the US or is
Yep.
with Uber Eats and stuff like that.
Yes.
That has to be worth something. So even in the worst possible scenario where they lose in the US, this business is not going to go to zero.
Yep. No, that
And I
makes
just don't
sense.
think that scenario plays out altogether, anyways. I guess the last thing, like kind of closing thoughts to throw in here, I think, and the CEO consistently talks about this, and he was actually the CEO of Expedia before going over to Uber.
Dara.
Um,
Yeah.
yeah, Dara, yeah, Persian also,
He's
by
the
the way.
goat. Yeah, I know. He's great. Yeah.
Yeah. So he makes the point of like they want to be the demand aggregator of the industry. And that totally makes sense. He's like the same way how a Hilton hotel or a Marriott or Chase hotel or whatever will have their own website and a decent chunk of consumers will just book through the Marriott website. People also go to booking.com, people also go to Expedia, and some people just prefer to go to Expedia or whatever and book through there. And so who are you as Marriott to decide where consumers should interact with your services? At the end of the day, if you're Marriott, you just want to have the highest occupancy rate within
Yeah.
your hotel, right?
Hmm.
Who are you to say no to an incremental 20% of revenues, given that you're giving a take rate to booking.com or whatever? Any business in the world, I don't think I need to say this, but it's kind of obvious. Any business in the world is more than happy to take a lower gross margin for having a room that would have otherwise been empty,
Correct.
have somebody be in that room and like
Yep.
still generate revenues, right? Because your option is generate no revenues or some revenues at a lower take rate.
Totally agree. And I'll just throw that in as a personal anecdote. But yeah, Uber as a customer, it's my go-to type of mobility service. As I don't own a car, I live really downtown and I walk to work. Yeah, yeah, like everything's real close, right? But for both my
I
wife and
remember.
I, whenever we have to go somewhere, and TTC is too troublesome, we just take an Uber. We don't even. I know there's a few other, like Lyft and all the others, but we don't use. There's even a new Canadian one. I forgot what it's called, but I don't even know know what it is, but I know of
Yeah,
one.
yeah.
So
It's the
yeah,
green one, right?
yes, yeah. What's it
Yeah,
called
I've
again?
seen it.
I don't remember the name.
It's got a weird name.
Yeah.
Hop.
Anyway. Yeah, something
Hopper, yeah,
Hopper. Yeah, I think. Yeah,
yeah,
exactly.
something like that. Yeah, yeah.
So yeah, but Uber, just because, I already have my profile on it and it gives me these random, bo like you said, bonuses or whatever. It has all these offers and stuff like that. And it's just the app is very, very intuitive and simple to use. I think they kind of cracked that code too, kind of like how Apple did back in the day, right? To have a product that's very idiot proof type of thing where it doesn't matter how good you are of technology. I'm not. I can just pick it up and immediately understand how to use it. I think that's a very underrated point as well.
I think that there's a bit of mild switching costs in there as well. Of like you have all your saved locations in there.
Yes,
If I want to go to work, it already has it there. It knows where my house is. It knows my favorite restaurant that I've transacted with 40 times over the past 2 years. So all these
exactly.
different things are in there. With the AI algorithms they have working in the background, they know what to feed me and stuff like that. If I go in at 5:30 p.m., it knows I'm probably going to be booking, and it can see my location is at work.
Hmm.
It probably knows I'm going to be booking a ride to my house. So it'll just put it right in front of my face. Oh, do you want to go home? Right.
Yeah,
And
yeah, yeah,
so,
yeah.
yeah, there's mild switching costs with that type of stuff as well.
Yeah, no,
Um,
for sure. So just to stay on Uber for a couple minutes. So obviously you have it as a position. You believe in it longer term, medium term at least, right? Are you thinking like
Longer term, definitely.
yeah?
Yeah.
And what's the growth profile looking like between different regions of the world? Is it more or less the same, or is it more in the US, more in Europe?
No, the one thing I would say is like total revenue growth rate across the business is about 18% year over year. And like I could
Mm,
definitely see over the next 3 to 5 years, we stay above that 15% revenue sort of growth rate. And like that might seem a little bit aggressive for such a mature business. But then the way I go back to it is like total trips being conducted on the platform is on its own growing at about 10, 11%. And then your other lever that you could pull on as Uber is frequency. So
hmm.
I would actually encourage most of you guys to kind of go out and look at this yourself. But I went from 5 years ago doing maybe one Uber ride every couple of months, maybe an Eats ride here and there. I counted it actually yesterday. I think combined, my family has done about 30 trips and Eats over the past roughly month. That's
Oh,
almost every
wow.
single day. So we're definitely in like the super high tier, like
Yeah.
like definitely in the upper echelon of Uber users. But I would assume it's relatively similar for most people in terms of like over time, the frequency of you using Uber or Uber Eats, just because it's so convenient, it's pretty cheap considering other options and stuff like that. And
Mhm.
prices have been driven down over time. So it's a very convenient service for consumers. And I'd encourage you to actually go look at your orders. But odds are you've transacted way higher number of times than you would have imagined.
Yeah, yeah, yeah. No, that's a good point actually. Not just populations, but also how much more frequent are they using the service? And
Yeah,
yeah, if you
yeah.
have, I guess, a big presence in a low population growth area, but the people go from using it once a week to 5 times a week, that more than makes up the low
That'll be a
population
lot of
growth.
revenue growth. Yeah.
Yeah, yeah, yeah. No,
Yeah,
excellent
and
point.
that number's grown at about 5% over the past 4 or 5 years, by the way.
Oh,
So
wow.
the frequency growth rate. So the
Yeah.
average Uber user uses them about 6 times per month
Oh,
currently.
wow. That's a lot actually.
Yeah,
Wow. Okay.
I'd
Impressive.
assume the median is lower, by the way, because I think you
Yes,
have people like me where it skews the average up.
of course. Yeah, yeah, yeah,
Whereas, like, I think half the users are transacting 1 to 2 times per month. So obviously, if you
yeah.
have a pool of people where they're transacting 30 times and one to
Yeah.
two times, right, the average gets skewed up there.
Yeah, I'd say for my wife and I combined, it's probably like 5 to 6 times. Like I probably do it like twice, and she does it maybe like 4 times or so, like once a week. So yeah, no, cool. Okay, excellent case on Uber. Is there anything else you wanted to talk about that came up that you want to bring up?
You know what? We could touch on ASML briefly because that was a pretty good clip from last time around that we did this. There hasn't been too many developments with the company. I mean, the moat is still intact. In terms of, we said, I believe last time that we expected that in 2025 is going to be a huge revenue year for them. I think
Hmm.
revenue in quarter 1 was up like 20%. That's probably going to accelerate from here. Um, Overall, the business is as solid as it gets. Last time you asked me, like, oh, can China or can any other competitor replicate their technology?
Yes.
And so there was actually news that came out, I think, a couple months ago that like China is now able to create the same EUV nanometers that
What?
that ASML
The
is. So
EUV
hang on.
machines?
Yeah, no, not the
Oh,
machines, but
oh,
they're able to print at the same wavelength that ASML is able to. And so the CEO, he got directly asked on the call. He's like, "Hey, like, what do you guys kind of think of this? Like, what do you think of the China situation? All that type of stuff." And he kind of brushed it off, but he's also saying like, I think this is more. I'm going to butcher this quote, but he was saying it's more of like optimistic sort of wishful thinking for China or the competitors there to be able to have a technology that is on par with ours. If they can, in theory, create this wavelength in a lab, sure, that's great. But also, this isn't a question of like just replicating the technology. This goes back to the same thing with Uber, right?
yes.
Um, but it's never a question of just replicating the technology, but all the adjacent things around the technology as well. What do I mean by that?
Yeah.
It's with like for ASML specifically, like okay, let's just say you can print at the same nanometers that ASML's EUV machines are also able to print at. Okay, but what is your yield on those chips? ASML 98%, 99% of the chips that are made, they're good to go. They have no flaws, and they're good to go and be placed into an iPhone.
Right. They're perfect.
Yeah,
Operational. Yep.
their operation exactly. There's no defects, nothing like that. If China were to replicate that machine, odds are the yield of that is going to be significantly lower than what ASML is making them, just because of the expertise that they've built up over the past 30 years. Okay, let's just say you solve the yield question, no problem. You're just as good as ASML. What about your throughput? How many chips are you making per hour? If you could if you
Yeah.
could make 100 chips per hour, that's great. ASML over there is doing 1,500, 2,000 chips per hour.
Right.
It
Yeah.
is by no means is it even close to being economically feasible for us as Taiwan Semiconductor or Intel or Samsung to buy your machine that sure it could print at the same nanometers, just as good as yield. Yeah, we would be taking like a 90% decline in our volumes if we ever went with this machine, right? So
Hmm.
it's a multifaceted question of
Yes.
being able to pull on all these different levers, and then even by some miracle they can solve that side of the equation as well. Okay, but we've already, we have this relationship with ASML for the past 30 years. We know that if one of our machines goes down within 24 hours, they're going to come in, service it, have it operational again. And I can't remember the exact number, but there's like a ridiculous amount of money that is lost if any of these machines ever go down. So
Hmm.
like it's that reliability, it's that
Yeah.
relationship that they've built over time. So it's
The switching cost is so high too. Why take on a new partner that is not even as good or not as fast and that doesn't have as much experience? It doesn't
as
make sense, basically.
unproven.
Yeah. Yeah,
Yeah,
unproven,
yeah. So
exactly.
it's the moat is as solid as it gets.
Yeah, yeah,
Is
yeah,
what
yeah.
I'm trying to get at.
Yes.
I if there's any news of these EUV machines being created in China, I would completely just brush it off. The CEO again, he's like, yeah, I think the closest competitor is about a decade away from us, and
Okay.
that's all fun. But what you miss in that is that like, okay, within a decade they're going to get to where ASML is today. By that point, ASML is 15 years ahead,
Yes, of
right?
course.
So it's like no entity in the world will ever catch up to ASML.
Yeah, they'll have the next version, whatever of EUV it is at that point. I'm assuming they're investing a lot in R&D to make them better too, right?
They
Constantly.
spend a stupid amount of money in R&D. I think close to a quarter of the revenues, not even gross profit or
Oh,
anything, a quarter of the revenues goes towards R&D.
wow.
They have a
Okay.
huge R&D budget.
Hmm. Okay. Oh no, that's interesting. Well, thank you for sharing that update. Any updates on Amazon, for example? I know Amazon's been killing it lately.
It's just business as usual.
So just still
AWS
killing it.
keeps, yeah, I mean,
Yep.
it keeps going up and to the right. They have this like robotics thing. I think at some point this year they're going to have more robots than they do employees within the warehouses. So
Oh wow, really?
that's a
Wow.
pretty interesting development. It's just a move towards being more and more efficient over time. So
Hmm.
uh, that's about it.
And I forget, you own Google. Obviously, yes, you own Google.
I own Google as
Yeah,
well. Yeah,
yeah, yeah, yeah. Still feeling good about it too. YouTube and all these other pieces, Google
yeah.
Cloud.
The one thing I consistently keep saying over and over again is the mixture of YouTube, which I think we're all convinced YouTube is not going anywhere. It's completely
Yes.
unique. The Google Cloud business, and then YouTube Premium revenues, because that's two different
Right.
lines. It's like YouTube ads, and then
Yes. And
you
then
know what I mean.
premium. Yep.
Yeah. So the mixture of those three things combined, I think, and I'm a bit optimistic with this, but you slap on like a 10 to 12-ish times revenue multiple on that, which by the way, this entity is growing north of 20%. super high margins, super wide moat, you kind of corner into a number where like 2/3 of the market cap today makes sense without search. That's a bit
Oh, wow.
ridiculous because
Yeah.
search makes up 60% of the revenues, probably like 70-80% of the profitability. So
Hmm.
the the cash cow, the juggernaut of the business, if you strip that out, the market cap still somewhat makes sense. What that lands you at is that like 5 years down the line, the entity I just described of cloud YouTube and YouTube Premium, in 5 years time, that'll probably be what the market cap is worth today. So if you're buying into Google today, your worst case scenario is search goes to zero over the next 5 years as a result of
Unlikely.
ChatGPT. What
Yeah.
super unlikely,
Yeah.
but let's just say it does, and you don't lose money. So the
Yeah.
most important segment of the business goes to zero. You lose out on it, and you still the stock stays flat. That's your worst case scenario. So that's kind of speaks to how cheap the business is. I'm personally in the camp of like search is definitely not going to zero. They have AI overviews built into search now. I think a huge number of people that by the time they woke up to the fact that like, oh, AI is a thing, I think again, like think of like my dad or my mom or whatever, like they just discovered ChatGPT's existence a couple months ago. You know what I mean?
Right.
Um,
Yes.
by that point, like they've already seen AI overviews, and like odds are their queries are not going to move that materially over to a dedicated LLM like ChatGPT. So
Agreed.
yeah,
No, I am firmly, I don't back any horses in that race, as people say, I think. I don't own any of these stocks, but I completely agree with you. And again, my own user behavior too. I don't use ChatGPT as much as sometimes people would expect, just because I notice it makes mistakes. I kind of don't like it very much. You know what I mean? So I don't ask it very much about informational things. I ask it more something like, I'm trying to build my budget or something. Help me format it nicely. You know what I mean? That kind of stuff, right? Or like
yep.
what's the best formula to do this thing on Excel, or that kind functional things. But informational stuff, I am still firmly in the Google search type of camp. That's always my thing, and I don't see that really changing in the short term at least. So
Especially globally, right? Like
yeah,
we're kind of thinking of it as like a tech savvy person in their 20s,
yeah,
living in North America at the forefront of this. Especially like we're super into this with all like the FinTwit updates and stuff like that.
yeah,
Um, dude, your average everyday consumer is not looking that deeply into it. They don't.
correct.
When you remember when the Perplexity stuff came out,
No, explain.
do you know what Perplexity is?
No, I don't know what that
Okay,
is.
well that kind of makes my point right there.
Okay.
Perplexity is just like another one of these LLMs, and like people were saying, I think this is roughly close to a year ago actually. They're saying like, oh, Perplexity is the Google killer, and like
No,
it's
really.
yeah.
Okay.
So and then I just ran a very simple exercise. I walked up to my 10 closest friends. I was like, have you ever when we talk about LLMs, which one have you like kind of heard of? And they're
Hmm.
like, what's an LLM? I was like,
Yeah, exactly. Right.
I was like for example, ChatGPT and stuff. Like,
Yeah.
have you heard of other ones? And they're like, oh, I thought it was just ChatGPT is the only like AI company there. And then I'm like, okay, brilliant. They don't know about Claude's existence or Perplexity. They don't even
Yeah.
know Google has Gemini.
Yeah.
So
Yeah.
it kind of speaks to the fact of like I think we're way too deep into like we're reading way too much into this and these companies and stuff like that. Whereas like 90% of the population is not well versed on this or is not keeping up on these updates and stuff like that,
Yeah.
and they don't care.
Agreed. Agreed.
Yeah.
Huh. What
Um.
one
What,
oh, sorry, go ahead.
yeah, I was gonna say to your point of like you're using it for functional things. That's another argument I've made in the past. I think there's actually very little overlap with what you used to be searching on Google that has now moved over to ChatGPT. ChatGPT
Hmm.
unlocks a lot of new abilities. So me personally, I use it as like a personal assistant. If I'm
Hmm.
doing a
Yes.
YouTube, yeah, if
Exactly.
I'm doing like a YouTube title,
Help
I'm
me
like, hey, like, what do
brainstorm
you think
stuff.
of this?
Yes.
Exactly.
Yeah.
What do you think of this YouTube idea? Or I just upload my thumbnail sometimes. Like, what do you think of this thumbnail? Right, stuff like
Yes.
that. I use it as like a personal assistant, whereas Google, I'm using it for information search, and I think there's minimal, like the Venn diagram of it. There's minimal overlap of what
Agreed.
has now personally shifted over to ChatGPT from Google.
Hmm. Yeah, 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 no, 100%. Yeah. What are your thoughts? I know you don't own that one, but Microsoft, they managed to integrate Copilot in a lot of their I don't know if you're aware, you've probably seen, right? You know
Yep.
Copilot?
Yeah,
Yeah.
yeah, of course.
What are your thoughts just on that and what that could
Um,
do to others?
I'm not. I know they've started integrating Copilot as like a safe, like for example, like if you look at like RBC or something like that,
Yep.
which by the way, for listeners, if you don't know, it's the biggest bank in Canada. Like RBC, they specifically ban using ChatGPT on work computers because
Yep.
they don't want that information to be on the network and stuff like that. The sensitive company information to be on an LLM. So I think there's a huge application for Microsoft, which is a very trusted partner of enterprises globally, to be able to create like a sort of safe version of ChatGPT or Copilot and sell that to an RBC or any of these big enterprises that are worried about the security side of the equation. So I think there's a huge application for it on that front. I know for a fact developers are seeing a lot of value out of these like AI assistants and stuff like that. I'm not too well versed because I'm not a developer myself,
Hmm.
but from developers I've talked to, they're saying, yeah, like it's been a game changer. We're 10 times more efficient. And all the low level manual tasks that we used to do and used to dread doing have now become way more efficient. Um,
Yeah.
so I
Yeah.
think they're in a solid space, Microsoft.
Yeah, it's definitely, I'm seeing it with like, I mean, they've already had a entrenched moat, right? But by doing that, I think it helps. What you mentioned, I have observed this at my organization currently and my previous one. They're both the biggest in their industry, and they did exactly that. They opted for the Copilot, literally, and AI, you can't use any other AIs. We have to use that
Exactly.
one. And it's like integrated in the, when you open the browser, it's all there and everyone's just using it and it's like, oh, this is great. So when it came out at first in my previous organization, I was like, I don't like this. I'm a ChatGPT guy because that was the first one now. But now I'm totally used to it and I fine with it. So
So this speaks to another thing of distribution. At the end of the day, is the moat. It's not who comes up with the best technology. It's the
yeah,
distribution of it. Microsoft has distribution across a billion organizations around the world. Not actually a billion, but you know what I mean.
many. Yeah.
Any enterprise around the world, they use Microsoft in some capacity. Same goes for Google. They have the distribution of every human being on earth probably uses Google to some capacity, and that is probably more valuable if you could come up with a good enough solution to slap in front of their face.
Yes, exactly. Good enough is actually good enough. You don't have to be the best at anything if you already
No,
have the network.
yeah,
Oh, that's cool.
but Google's actually their LLMs are ranking higher than ChatGPT at the moment. So they're
Yeah. Yeah,
yeah.
right. Google's killing
So
it. Okay, cool. Well, Aria, thank you so much for this incredible discussion. I'm really happy to have had you again so that you could elaborate on your past ideas and explain more about your new ones. And yeah, I had a great time. Thank you very
yeah,
much.
likewise, man. Thank you for bringing me back.